Good afternoon, traders. Manifold Capital Partners here, bringing you today a pair trade over here with Facebook and Gilead. What do we want to do today? Well, we basically want to trade two different underlines at the same time and work them as a pair to maximize our profit and also distribute any sort of downfall we may have by trading the pairs and offsetting each other to the other one. With that said and done, many of you might look at this video and say a $280 profit for a 1,000 share allotment of two sizable, notable liquid stocks such as Facebook and GILD is not a very good risk-reward ratio. For basically tutorial purposes, this video was actually taken in the 3 o'clock afternoon period. With that said and done, still, when you're trading a pair, you're not looking for a very, very large catalyst. Here's our first lot here, 1,000 shares of Facebook at a roundabout even number cost of $72.94. You will note both of these trades are going to take an effect around in a breaking of an even number. And it's those two even numbers that we're going to play as a trade. We're not trading anything bad news or good news or any sort of catalyst at all. We are trading the normal variation of the stock today, and we're basically going for normal trading techniques over here with regards to support and resistance. Very simple and very entry-level techniques we're using here, but we're adding a little bit of sophistication with our platform. Manifold Capital Partners is the only CFD proprietary trading firm in North America. Gives you the most leverage, gives you the most shortable securities out there than anyone out there. You can get more information on that at manifoldcp.com on our website, and you can either sign up as a affiliate trader or work with us together, making your trading success come true. Well, let's continue now. Back to the even number scenario. We've shorted Facebook just under the $73 mark. What that basically means is it's an even number. We shorted it and we broke it. And here's our second one: 1,000 shares of Gilead. Okay, $92,000 value, and the average cost for Facebook is a $73,000 value. And our average cost in Gilead is at $92.03, and we're breaking that mark as well. As you can see, chart patterns are very similar. We've got some great sell-side momentum on both of these equities, and they're both relatively in the same position. We want some continuation. We've broken their support levels. There you see 92.03 was broken, and we want to basically, in a trade such as this, to break a good 20-25 cent mark. Now, that would be a successful trade in my opinion. When running a pair, the key is that you don't need one simple trade to go give you the real rush and tidal wave of huge profits, although we will take that when it comes. Instead, what we're looking for is two very, very average sizable returns in an average sizable amount of time, and diversify, and your risks are spread out, and you're not trading any catalysts here. And as you can see, $90 on GILD and $20 on Facebook, and it's going to go up and down, back and forth, and you'll see those numbers change quite rapidly. We will not be satisfied with breaking this trade until we reach our, we want to reach our 20 cent mark if we can. And if we see any trouble in the horizons, then we'll get out. What's trouble on an even number? Very simple. In the Facebook scenario and the GILD scenario here, GILD is at $92 right now. If 92.10 were to come up and break, we would be out of the trade. See, $92 to $92.09 would still mean that the 92s are selling. Anytime when a stock bounces off an even number and gets back into the double digits where it's not 8 cents, 9 cents, it's 10 cents and above, you'll find a lot more support propelling that into the double digit scenarios. So as of right now, anything under 92.09 and under is still favorable in our short, and it would be acting just normal. And the same goes with Facebook. Facebook's at $72.94 is our average short cost. If Facebook were to go up to $73.09 and hover between there and here, we would actually still be in good condition in our short. And that's the same conditions. It's once you break a 10 cent, it goes into a double digit. You hit 10, 11, 12, 13, 14, and then the momentum shifts over. it's a very psychological game in these round number scenarios, because you've got a lot of electronic buyers and a lot of electronic sellers, and that's really the key. And you just have to monitor it. It's not something you can take a look at in one particular instant and trade it. With that said in mind, we're shorting 1,000 shares of GILD and 1,000 shares of Facebook, and on a CFD platform at Manifold Capital Partners, we do not have to borrow the underlying, and we do not need to actually have any of these underlying in stock on a short list. Actually, we don't even need any liquidity. The number can pop up on our level 2, and we can at any time cover those shares without liquidity. We do not have a liquidity problem here at Manifold with Colmex Pro. It is a CFD platform, and CFDs basically means contracts for difference. For more information about that, contact us at manifoldcp.com. It'll explain a lot further to you. Here we are in our GILD trade. As you can see, it's at the 92.02, and there's still sellers. There's still quite a bit of sellers, and there's a big wall there. Here's Facebook, and if you can take a look at Facebook, and let's just keep watching this here. And really, those two green candles are not doing anything special for Facebook right now. Take a look at GILD, 91.99 on the ask, and the bid is at 91.97, and there's no real pressure up pushing this stock up right now. There's just not a stack of buyers. And then when I mean stack on level 2, you will see a price 5 or 6 or 7 deep. And right now you just see that on the ask side. If you look on the ask over here on GILD, you'll see it's more. Now take a look. Here's our stop at 92.10. Okay, we're just showing you for GILD. Now take a look over here at Facebook. You have a big wall of sellers, and that's visual, 72.92. Very, very big wall. And those sizes there, 322, those are in hundreds. And anytime you have a very, very, very big, huge wall of sellers like that again, and as you can see, again at 92, okay, again at 92, that was a very, very deep wall. Okay, the 92 wall is extremely big. Okay, 93 wall is extremely big. 91 wall is extremely big. 89 is big. It is visual. The wall is bigger. The wall, what I mean by the wall is that you got a lot more stacks of sellers in that same price willing to sell than there are buyers, and that's what pushes the stock down, and that's what we like in a short position. And then again, it's visual. Right now, I really don't, as you see the extreme selling wall, we really don't need to read a lot. We just actually really have to color coordinate. It's almost like playing an arcade game, but a little bit more sophistication involved. And here we are, our downside continuation. Here we are. We would like more volume in it, but it's still going our way. So we're okay with that. And let's take a look. We'll put some data here down. We'll put the GILD on our mini chart at the bottom here. Here we go. Now you can see there was a little bit of a stack there for buyers at 72.93. But how many times did that happen? How many times did it happen? And where has the stock been right now? It's been stuck in that 72.90 mark. It hasn't even passed 73 yet for a while. Back to GILD, 92.06, 92.08, getting close to our 10. All of our stops are not hard stops. They're mental stops. You know, we would not put a stop on this. These are normal trading conditions for two very liquid stocks. So although 792.10 would be my stop, I would stop it manually. Right now it's a mental stop. It's not a hard stop, or a soft stop, some of you may call it. And we're going to wait. We are going to wait, and we really want to find out exactly where this trade, because none of these positions are going against us right now. They're actually working for us still. Okay, let's see what happens here a little further. We've got a nice downside sell there on GILD again, and let's take a look at the 5-minute. That green bar is not doing anything good for it right now. It may look like a pause candle from a continuation standpoint. And here we go. We have a mix and match of buyers and sellers, which is not good for going up either. Okay, 92.01, big stack again. Take a look at time and sales. There's hardly any green. It's more reds than greens and whites, which is still good for our short. And here we are. We're breaking. You know, we're gonna break this 92.90s. We're gonna break these 90 cent area here for GILD very soon. There's just too much selling pressure. and with that selling pressure, there's hardly any buyers, and they just can't last. So here we go. We'll just wait here, and that's one of the best things a trader can do, is wait and study. We're up almost about $170 combined with the two. Not good enough yet for the amount of risk capital we have out there. On our platform at Colmex and Manifold Capital Partners, you could do this trade for as little as $7,000 to $10,000. You can get this buying power. You would have that, and there's the downside. It continues. We've broken the 90s. We'll take that profit. Thank you. Almost $200, and we'll take the Facebook here at 100. Okay. Once we meet one of our targets, we want to shut down the other one if it's still acting the same way. And we will take this $90 here and close off our pair trade. It's been almost roughly about 8 to 10 minutes. We are fully embedded into these two positions, and we're just about coming out. I hope this was an informational video, was helpful for all you traders out there. And just bring up our trade manager here to show you those were our trades. Those are the times, those two trades, and those two executions. Thank you very much for watching, and I hope you get something out of this. Have a good day.